Hey everybody, Courtney Smith here with our September 12th edition of Wall Street Winners. Let's dive right in here. Lots to talk about today. So first of all, as you know, we got short up here, or we said the market was going to go down. And then last week I told you we're going to get a rally. And of course, we got a rally. This rally is going to last another week or so on the upside. I don't think it's going to surmount the old highs up here, and maybe we'll just get back up to the highs we made a couple of weeks ago. Purple predictor remains weak, as you can see, so it's not going to be a super sustainable bull market. Okay, we're going to have to still stay in pick and choose mode, where we pick and choose different stocks in sectors that remain bullish. And there are sectors that remain bullish, and there are stocks that are in bull markets. Of course, fully paid up members get those picks. Over here in the Dow Jones, you can see the buying pressure and selling pressure basically equalized, but that's a significant change from the massive amount of selling pressure and very little buying pressure. Now they're about equal. So still a little bit bullish. NASDAQ, oh, look at what happened here. This purple predictor is in bad shape, but we had a gap up on Friday, and usually indexes don't gap. So that's actually a pretty good sign, although it happened on low volume. So it's like that gap wasn't as important as it could have been. But nonetheless, I'm looking for a continuation of this rally for another week. Beyond that, not so sure. Over here, we remain neutral on our seasonality indicator, but the Utes got back up above my buy point, so we have to count them as bullish. Now, here's the critical thing. We still have another week of possible strength here, and then notice, according to Stock Traders Almanac, we then drop sharply at that point. This is what's making me nervous, okay? So let's keep an eye out on that. Asset allocation, money came out of the bond market, out of safe bonds into risky stocks, and the risk indicator went up as well. So even inside the stock market, they shifted from less risky to more risky stocks. So that can cause the market to sustain this little bull market a little longer than expected. Global shares pop over here. So that was basically following the U.S. stock market. Our yield curve indicator here is flat and really hasn't moved at all. Both the long-term and the short-term rates are still going up. And here's bonds. So as bonds go down, that means bond yields go up. We're going to break these lows. That's going to happen this week. So look for long-term interest rates to continue to move higher, and for the Fed to raise short-term interest rates higher. So as a result, the yield curve will stay pretty stable at this point. Now, eventually it's going to start changing a lot, but that's probably months away from where we are now. Our bond key indicators, the most important one is this blue line, and it's skyrocketing higher, suggesting higher interest rates. That's the 10-year Treasury yield in Germany. But notice behind this, you can see that the CRB, that's the chart there, been kind of stable. It's not suggesting we should see higher rates or lower rates. Gold over here has been in a major bear market, suggesting that we should see lower rates. But right now, the most important factor is 10-year treasuries in Germany. Over here, US dollar. Now, normally, if we see higher interest rates, we should see the dollar higher. And generally speaking, that has certainly been the case. Although Friday's price action was not great for the dollar, I think the dollar still remains in a bull market because of interest rates and because the US economy is stronger than most other economies in the world, including Europe. Over here, gold, like who cares? I mean, really, look at this. One way you can always tell what the market is it starts in the upper left and ends in the lower right. That is, by definition, a bear market. So look for gold to move lower this week. And here are our indicators. One is neutral right here, very flat, but the other two are clearly going down. And so the pressure is going to continue to be on gold. With interest rates rising, that would normally be bearish for gold, but because inflation is still going up higher than interest rates, real interest rates are more bullish for gold, but it's not strong enough to overcome the other bearish factors. So gold will continue to drift lower. I'm sorry, gold bugs. You're just going to keep on losing money. Now, crude oil is interesting. Look at this. Look at how the purple predictor is making higher lows. We made higher highs, but that's okay. But we're making higher lows, and we're almost about to make a higher high. At the same time, we have a big divergence because crude oil goes and makes a lower low, and we're not even close to making a high. So the smart money's back on the long side of crude oil. Now, we saw the Saudis, we saw OPEC Plus, I should say, cut oil production by 100,000 barrels a day, which is a trivial amount. But the point of it was to say, hey, we don't want oil prices to go any lower. And I think that's getting the smart money to come in and buy crude oil. So the trend is down, but based on my analysis that I just said, I think we're going to see a strong week ahead here in the crude oil market and maybe get back into a bull market. Now, the recession is going to come later and really hit the demand for oil. We haven't quite got to that phase of the recession, but we will before the end of the year. Over here, stock market strong. Guess what? Bitcoin pops. So we can't be bearish Bitcoin. I had gotten short Bitcoin, got bruised a little bit here on that pop that we saw late in the week. But overall, once again, we start in the upper left, we end up in the lower right. This is a major, major bear market in Bitcoin. We try, of course, to capture shorter term moves as well as the big move. So I'm no longer short Bitcoin. I have no position. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Lab scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I'd normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented as a formula. John Kelly to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. And you get to that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.